And good morning, good evening, good afternoon, professional traders and students. How is the sound check? Sound check, all right. Sound check, all right. Nice picture, huh, everybody? This is an example of your lifestyle. This is an example of your future lifestyle. You don't like it? Yeah, yeah, it's an old picture. Yeah, you see the Lambos are old, you know, it's old style. The new Lambos have a different front. Pagani here, Pagani zoned, I believe, if I'm not mistaken. Alright everybody, this is our last class, so starting from tomorrow I am on vacation. See you back on September the 2nd. And today we have, the title is Stop Loss and Take Profit in Market Structure. So let's take a look about the manual. And this is about a question on relations between time frames and candles. So from the manual it ends the cat 15-minute chart to the weekly charts, trading chart in concept. It says yes, the higher time frame controls the smaller time frames. We learned this about yesterday. And I cannot base my trading decisions on the 15-minute chart based on what is happening on the weekly chart. Just an example. Example, the weekly chart is not relevant to the 15-minute chart as general direction, but yes, it is relevant to the momentum, and momentum is what the market is doing right now. So the weekly chart is not relevant to the 15-minute chart as general direction, but yes, it's relevant. So the momentum, you know, it was the tail of the candle was going down, and this was then on the 15-minute chart. So as you can see from the picture, the market is falling on the 15-minute chart, so I cannot say I'm not going to short the 15-minute because the weekly is doing it's making higher highs, higher lows, and the candlesticks are bullish. Okay everybody, so this is the from yesterday we were trying to learn how multiple time frames work. Okay, this is now the continuation of yesterday's lesson. Okay, and it makes sense for me to say, well, on the 15-minute chart, you know, I should really be selling, I should be shorting the market, but on the weekly it's making higher highs, higher lows. And the same concept applies to the daily and the monthly. Momentum, what the market is doing right now, if the candle on the monthly, weekly or daily is bullish right now, all the smaller time frames are moving up. By contrarian, if monthly, weekly and or daily candle is bearish, all the smaller time frames are moving down. But this is right now, at the moment you are looking at the chart. Tomorrow might be another story. The Forex market, it's opened 24/7, never forget this. Ends the cat monthly chart, stop loss and take profit in market wave, having the market wave and the short-term trend depending on where you are, you know, where you catch the movement. Market wave and the short-term trend. Remember, the stop loss is going to depend based on what pattern you choose to trade. You can trade the market wave, which is the blue color, or you can trade the short-term trend, which is the red color. You can trade the short-term trend, the red color. If you're able to catch the first entry at the first short-term trend change to the uptrend, you will place the stop loss at the first relevant low, the lowest low. But if you miss the first entry, then you will have another entries and the stop loss will be put below the previous confirmed low of the short-term trend. Hello Abdul, how are you? Yeah, we are reading the manual. At the first entry on the short-term trend change to the uptrend, if you have enough funds, the stop loss will be put below the market structure, confirmed low. Otherwise, if you have a small fund, you will place the stop loss below the first relevant low of the short-term trend. Learn the skill talking about the blue market wave. Every time that the market moves and makes a higher high and higher low, the risk-reward ratio gets worse and worse and worse. But this is common sense, right, everybody? The best entry was in here. So if I miss the entry and the market's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, the risk-reward ratio gets worse, right? Who knows? This is our last lesson. I'm going to be back September the 2nd. And I'm going to visit Abdu in his house. This is Abdu's house. You know? No, this is my house. It's all good, you know? It's not a problem. Okay, everybody? So the risk gets higher and the probability is lower as the market moves further into the extension. Guess why? Exactly, because the market must retrace. It's an absolute must. You need to learn this stuff, everybody. You need to learn this stuff. It cannot move any other way. The market, in order to move, it must wave. Learn the skill. Understand this. Now we have a different problem as the blue market wave progresses, and you may place the stop loss at the right place below the market structure. You still want to have a risk-reward ratio 1/2, meaning when you lose, and you are going to lose time to time, believe me, you are going to lose 1 Bitcoin, 1 euro, $1, but when you win, you want to make 2 Bitcoins, 2 euros, $2. So even if you put the stop loss in the correct place, where should my take profit level go on the chart? Abdu say it's okay, I accept it. Abdu, where are you from? Some of you are from Germany, some of you are from... Ala was yesterday, Ala is from Dubai, KJ is from Singapore, Daniel is from Croatia, Julius from Brazil, Clara's from Nigeria. Now we have a different problem. The question is, what's the probability of the market hitting my take profit level? Welcome to the next level of understanding. And so in every market structure, the stop loss goes above or below the most recent extension. Yes, this is a lesson. This is a forward lesson from yesterday. Placing the stop loss at the wrong level will cause you to draw down your account. Using smaller stop may work sometimes, but it will stop you out many times, and you may lose money often. It's up to you, but if you place the stop loss in another level because of your funds or no matter other reason, but if you lose 5% to 10%, don't do it anymore and place the stop loss at the correct level. Wow! I believe you are the first one, Abdu. Ethiopia, welcome. I believe you are the first one. I'm not sure anyway, but I believe you are the first one. What is the correct level for stop loss in this picture at the moment of that picture was taken? Okay, everybody, so yesterday we were talking about Euro AUD 2-hour chart, right? And what this lesson today is trying to teach you is I need to type in. All right, let's try to do it. What is the probability? How can I go in the second? Not working? See, this is the, or maybe if I text wrap anchor. What is text wrap? What's the probability? See, this is why I don't like typing on JForex. What's the probability of the market stopping me out and or giving me profit? Okay, everybody, this is the lesson about. What is the probability of the market stopping me out or giving me profit? Okay, so if you are on the 1 hour, 2 hour, 4 hour chart, just an example, okay, just an example, and this is the market wave, just an example, and you enter here at this counter trend line break, you know, on the 1 hour, 2 hour, 4 hour chart or 15-minute chart, you know, if you are trading the short-term trend, this is the stop loss. If you are trading the blue market wave, this is the stop loss. Agreed, everybody? We've learned this. Those two are two different patterns, right? Agreed, everybody? And let's do this differently. Let's do this like a red line. Come on, a red line. This is the stop loss on the short-term trend. This is the correct stop loss on the blue market wave. Okay. Now, if you are trading the short-term trend and you are entering somewhere in here, as we said, if you are risking 1 Bitcoin, 1 euro, $1, 1 house, you know, then you want to make 2 Bitcoins, $2, 2 houses, right? Okay, everybody? And if you are entering at the same time, I mean the same place, but you are trading the blue market wave, so this is the stop loss on the pattern. The stop loss goes on the pattern traded. So this is what you want to achieve. Agreed, everybody? If I'm risking 1, I want to make 2. So far, so good, everybody. Can you understand this? What we're talking about? And this is the 1 hour, 2 hour, 4 hour chart. Yeah, could be the 15-minute too. But then we are here and Fibo and Ichi are barking, so something is happening with Bitcoin. Yeah, we're going to check Bitcoin also. I cannot take this one. See, I don't like, I mean, I'm going to write to the programs. What did you do with the text? I cannot look at, anyway, everybody, so this one I can do it, you know, is we are here and the question is, what is the probability on the 15-minute chart, 1-hour chart, 4-hour chart? What's the probability of the market stopping me out? You know, what's the probability of the market stopping me out on the short-term trend, and what's the probability of the market stopping me out on the market wave? And what's the probability of the market giving me profit on the short-term trend? And what's the probability of the market giving me profit on the market wave? Let's see how smart you are, everybody. How do I know when I'm trading as an analyst? You are not a trader yet, you are an analyst, and you are trying to figure out how this market works. If you are smart, you are on a demo account first, okay? And if you can be consistently profitable for 3 months, then you are a good analyst, not a trader yet. Does this make sense? Okay, you are trying, when you are making profits, this means that not just one, now I'm writing a new book, and the title of the new book, it's called One Trade Means Nothing. Okay, stop telling yourself stories just because you have 2 or 3 winners that you are a trader. You are not. Alright? To be considered a professional trader, you need a 6 to 12 month record, and you need to be able to manage big bucks, big money, big funds. Alright? And tell your friends that the boss told tell your friends that the boss told you, you know, that having $100 in the account and make it 15% or 50% in one trade, you know, that they're gambling. They're gamblers. A professional trader would never do this. Make sense? That's the reality. That's the reality. Alright. Okay, everybody, so let's see how smart you are. How do I know what's the probability of my trade if I'm on the 15-minute chart, 1-hour chart, 2-hour chart, 4-hour chart? Exactly, you need to chart the market wave. Okay, everybody? Now, this is just an example, and this is the easy one. This is the monthly chart, alright? And you have this trade that you are looking at, you have this trade up in here. So this circle is this circle. What's the chance of your trade being a profitable trade? What's the chance of the market hitting your take profit level? And let's say that I'm going to try to clone just an example, yes sir. What's the probability of the market hitting your take profit up in here? Do you have a high probability trade? Did you enter a high probability trade? Did you enter a high chance trade? Or is this a low probability trade? There is no right or wrong. What do you think? Now this was an easy one, right? It's a low probability trade because we are at the monthly bands, and the market at the monthly bands, we don't know how, we don't know when, but the market is going to reverse. Of course, if the market is not going to break the levels, happens time to time, okay? But 9 times out of 10 the market is going to reverse at the monthly bands. Okay, we have a problem with the yen those days. A lot of yen pairs are at the monthly band, but still going up, going up, going up. And I'm telling my traders, be careful, be careful, be careful. Okay, so if you can understand today that if you would do this trade in here, or you would do this trade in here, or you would do the same trade in here, those three have a higher chance of success, have a higher probability compared to this one. Does this make sense? But why, boss? Why? Because you are at the monthly band. That's the why. Lesson number 1. What is technical market structure? How the Forex market works. The Forex market is nothing more than a contract between the two countries. They are importing and exporting goods, and they want to maintain the international trade stable. Okay, you don't need to know more than this. This is the logic behind why most of the currency pairs move like this. All right. Now, this is our last lesson before September the 2nd. Okay. Now, clone chart, AUD CHF, daily chart. Okay, everybody? So, if you are entering on the 2-hour chart, 4-hour chart, okay, if you are buying the market in here, or if you would buy the market in here, or you would buy the market in here, okay, so you go on the 2-hour chart, right? Just an example. 2-hour chart. You would use, as a good analyst, you would use the trend lines. You would zoom in. As a good analyst, you would zoom in, you would chart the trend, right? Or the market wave on the 2-hour chart. Right, everybody? High to low, low to high, high to low. Whatever might be the case, right? And you would enter long up in here, agreed? I would not. Why wouldn't you? The market's making higher highs, higher lows. Counter trend line break. Why wouldn't you enter in here long? I would enter in here long if I'm a beginner retail trader. So if I enter here, and this is my stop loss level, and I want to make 2, right? Before I enter this trade, I need to check, and let's see that. So you don't know the future vertical line. Let's go back on the daily. And now, what do you see from the daily? Everybody, God gave you a brain, use the brain. What do you see on the daily? Is this a high probability trade? Hello Allah, how are you? Is this a high probability trade from the daily perspective, or is this a low probability trade from the daily perspective? What do you think? I told you yesterday, you cannot win at this profession trading and checking just one time frame. If you zoom out, what do you see? If you zoom out, what do you see? Is the market making lower lows, lower highs, or did the market just did a higher high? Higher high, boss. If the market did the higher high, what is this called? What is this movement called? Come on, everybody, use your brains. You've learned all of this, it's not that difficult. Abdu, what is this yellow line called? This is an up. Allah, what is this up yellow line called? This is an up, what? This is an uptrend, boss. No. The yellow line, it's not an uptrend. No, sir. What is the yellow line called? Everybody, you are mixing apples with bananas. The short-term trend was charted from the two-hour chart. Don't mix the two. The green short-term uptrend was charted from, we were charting it from the 2-hour chart. And you've entered the market on the 2-hour chart. Some of you are late to the show. You've entered the market at the 2-hour chart. Okay, and you've entered the market in here, which is all right. This was the entry. This was the entry. This was the counter trendline break. Right? Counter trendline break, bullish candle. We didn't learn candles yet, but this was the entry. The market was making higher highs, higher lows. On the 2-hour chart, the market broke the counter trend line. So you have a counter trend line break, bullish candlestick formation, The market is above the uptrend line. You are entering the market, so far so good. But we are learning today the question, what is the, when I enter the market, what is the probability of the market stopping me out, or what is the probability of the market hitting my take profit? Not every trade is the same. This is the setup. And again, send Dukascopy an email and say, thank you, Dukascopy, for giving us free streams, for teaching us for free. You are really lucky, believe me. Don't take this for granted. I'm telling this every time, every now and then, you know. If I were you, if I were Dukascopy, I would charge you. I don't know how much, but you know, group class, everyday class, $1,000 for sure, if not more. This setup up in here does not have the same probability compared to the same setup down in here, or compared to the same setup down in here. It's the same setup. You could be buying an uptrend, you could be buying an up market wave. This setup has different probabilities, all right? And now we are trying to explain, so this is the setup, and now I'm going from the 2-hour chart to the daily, and I'm trying to explain you the logic behind. And I'm asking you, what is the, so question number 1, did the market make a higher high? Did the market make a higher high on the daily at your entry? Isn't the second circle higher compared to the first circle? Yes or yes? Yes, all right. So if the market made a higher high, what is the yellow price action called? And don't confuse the green short-term trend, because this short-term trend is not from the daily. This short-term trend, the green, is from the 2-hour chart, where you are entering the trade. What is this yellow line called? What is this yellow price action called? Uptrend? No. What else is there? Okay, everybody, let me, if I do this, what now better? What is this movement called, where you've entered the market? Market wave, very good. If this yellow is the market wave, and market wave, it's composed with extension, retracement, extension. What is this yellow price action market wave called? I mean, I cannot help you more than this. The market was making lower lows, lower highs, stopped making lower lows, lower highs, made the first higher high. So this is the market wave, right? So what is this, an extension or a retracement? What is this called? Boss, help me more. All right. Better. This is the hard high. And this is the yellow line. There you go. This on the chart is this on the picture, the theory. If this is the up market wave leg, this leg it's called what? An extension. Very good. An extension. So if you are one of the FX boss traders and you are entering, you are buying the market on the 2-hour chart, and you know that it's an extension, is this a high probability trade or is this a low probability trade? See, there is a logic to this market. This market, the Forex market, it's predictable to a certain degree. Everybody, give me a second, F11. No, F11 like now. No, okay. Everybody, give me a second. Everybody looking here. Everybody, this is one of my traders. His name is Vincent. Vincent is from Malaysia. And he is cleaning swimming pools. This is Douglas. And he is selling shoes. All right. If Vincent can do this, everybody look at Vincent results. Do you see Vincent, everybody? You're going to meet Vincent once you join Skype and Forex Course 202. By the way, on Saturday we have the US dollar index course, Javan and Ala. If Vincent can do this and he is selling shoes in Malaysia, believe me, you can do this too. But for you to get those kind of results and get funded on Darwin X0 and finally start to make some money, you need to understand this one. So Javan is saying, well, because from the daily chart, you know, the market made a hard high, and I don't know when and I don't know how, but if this is the first extension leg, what I do know is that this market is going to retrace, because this is how this market works. It's extension, retracement, extension. Make sense, everybody? So I have a low probability because of these concepts, because of those concepts, and because I have a low probability for the market going straight up and hit my take profit. Am I going to leave the trade, or am I going to still enter the trade, but I'm going to risk less? What I'm going to do? And Dukascopy should really charge you. I mean, this education, for the serious traders, of course, you know, it's priceless. I'm telling Dukascopy to start charging you, you know. No, really, I'm really telling them, you know, if you want better traders, we need to charge you. Oh, please don't charge you. Everybody, we're all the same, right? If I have a gym that it's for free and I'm lazy, most likely I'm not going to go to the gym. True or true? But if I pay even some small money, then even if I'm lazy, you know, something is going to bother me, you know, I need to go to the gym, you know. But you paid, you know, 20 bucks, but I need to go to the gym because I paid 20 bucks. Pay 2,000 bucks for the gym. You are not going to, if you pay 2,000 bucks for the gym, you're not going to be there. You're not going to go to the gym every day. You are going to sleep in the gym. True or true? We are all the same, everybody, don't worry. So it's low probability. So what can I do? I can still take a trade on the 2-hour chart. Talking about strategy, right? You can say, oh, I'm going to enter the trade, but I'm going to risk less because I'm risking for the market to retrace. Or I'm going to wait on the daily chart for the market to retrace. Does this make sense? Those are the two options. Now let's see how this is going to play out. And then we are done for the day and we are done for the vacation. All right, everybody, so I enter the market. I'm with less risk. Let's say that I'm risking 0.25, not even 0.5%. And let's see what is going to happen. Market going up, 1/1. Sideways, come on, you know, and please, down. Do you understand this picture now? Not every setup has the same probability. Not every setup has the same chance of success. All right? So there are places that you should put more risk. There are places that you should put less risk. And there are places on the chart where you should stay out. And that being said, the boss is going on vacation. See you back on September the 2nd. I'm going to visit Abdu in his house. This is Abdu's house. Okay, everybody? Have a great vacation too. We're entering July, August. It's vacation time. Okay? Don't forget, it's a learnable skill. If Vincent from Malaysia, he's selling shoes, if Vincent can do it, if Vincent can learn, you can learn too. And you're going to meet the guy. Okay, everybody, have a great vacation too. See you back in September. This is the boss.